But joining us now in the meantime, Bob Elliott, co-founder, CEO, and CIO at Unlimited. Bob, I want to get your thoughts on this. And I realize First Republic's been hit very, very hard by this crisis of confidence, if you will. I mean, is this a bank that's still fighting for its life, or is it through the worst of it?
Well, I think the earnings report does give some indication that First Republic has seen the worst of it and has seen stability, as was just highlighted. After the first couple of weeks in March, deposits have largely stayed stable. That being said, at this point, First Republic is a zombie bank with deposits down almost $100 billion from the private sector, if you exclude the amount of capital that was brought in by the big banks. And by and large, the balance sheet is being supported by the Fed programs that it's borrowing from. And so First Republic, what the Fed was able to do was to pause an aggressive or acute unwind of First Republic. But at this point, it's a zombie, and the stock price reflects that. OK, so what happens to the zombie here? And is this really sort of the last bank that was in turmoil, that was troubled by everything we've seen play out over the past month, for which we were waiting for results? Or are you watching some of the other ones that we're going to be getting this week, like PacWest, too, just as closely? Yeah, I think for the forward-looking story for First Republic is that there's probably going to be an orderly unwind of the bank in one form or another. There's obviously business value in certain things like the wealth management division, which was just talked about. They'll probably try to scrape together either a spinoff or particular sales of different pieces of the bank. But what we're probably talking about is, over time, a meaningful reduction in what First Republic looks like. I think the interesting thing and the thing that's actually what looks to be a bit of a positive overall is that the fact that First Republic's experience is so weak is indicative of the fact that the broader banking system is not as bad as we might have thought. In fact, almost 50% of the borrowings from the Fed through the end of March came from First Republic. On the margin, that's bad for First Republic, but actually pretty good as you think about the broader banking system.
And that's what I was going to try to get you to elaborate on. This reminds me of a home inspection report that doesn't look good, and you're trying to see, is somebody going to buy this house, or are people just going to go in and buy the appliances and it's going to go into foreclosure? It looks like this one's going into foreclosure, but that's so different from what we've seen from other regional banks that, in a way, for the broader market, isn't this a good thing?
Yeah, I think from a macro perspective, this is actually about as good an outcome as one could expect. And the reason why that is it highlights the fact that most people suspected that a lot of the Fed borrowings, particularly through the discount window, were going to First Republic given their acute deposit squeeze. This confirms that the vast majority of that discount window borrowing was First Republic. What it means is that the pressure that exists in the rest of the regional and small banks is less than we might have expected. And then it also aligns with the broader data that we're seeing, which is after a short period of deposit flight, deposits across the small banks across the U.S. has basically stabilized at slightly lower levels and, if anything, ticked up in recent weeks. And so overall, the idea that we're having an acute banking crisis here that some people were promoting a few weeks ago, it looks like it's mostly concentrated to a select few banks that are that face problems, but it's not a broader issue.